Welcome back to Overlook Stocks Time. George Tsilis is here to talk IDT, a parent company of several different businesses. George, obviously jumping on the heels of some corporate news on the earnings front. Talk to us a little bit about this company and what you took away from the report.
Well, actually, this company it's a small company. It's about $1.5 billion in market cap. It's actually very unique, just based on the number of core businesses the company has, and essentially, it's known as a payment provider company as well as a communications as a service company. So they operate essentially out of four segments. Their fintech segment, their national merchant retail solutions. They actually sell and install POS systems or point of sale solution systems for merchants, much like Toast Incorporated, which is well known for the POS systems and ordering systems for restaurants. They also have a money transfers business. It's called BOSS, essentially for domestic and international remittances. And then the other thing is the communications business. They have unified as a service communications, which includes contact call centers. Competitors include RingCentral in that space, but they also sell prepaid and postpaid telecom solutions to retail customers. So, it's a very unique business, and all their segments altogether seem to be growing quite substantially. For instance, their national retail solutions business is the largest business out of the four segments with about 36,000 terminals. They've been growing quite substantially, and they did report earnings where they bested the estimates by quite a bit on, at the very least, earnings front. They came in at around 90 cents per share. Estimates were higher by 38 cents compared to last year, so that was essentially more than double the EPS last year. Now, revenues for the quarter came in rather modest, only increased by about 0.8%, but they did beat the estimates, which are around $299 million. They came in around $302 million, but they actually demonstrated some organic growth in terms of margin expansion and, of course, market share expansion in their merchant services, software as a service business, which grew about 37%. Their fintech growth for the quarter up 25%, and they reaffirmed their 2025 guidance, as well as the fact that they started seeing pretty dramatic increases in their BOSS money transfer business, to which they actually started a monthly paid membership program, which has actually been taking off quite nicely. So for what it's worth, I went and looked at this stock. If you look at it in the last year, it's up around 85%. It's a quiet name. You don't really see it, across the ticker tape. And if you look at it in the last 5 years, it's a multi-bagger. This stock is up over 900%. They're executing extremely well. If you look at RingCentral and Western Union, that's another competitor in the money transfer space. IDT is quite handsomely outperforming them, substantially at least in the last year. And the company's still growing its EBITDA. Last year, EBITDA growth was around 36%, and they're still expected to continue to grow their EBITDA by about 16%, at least compared to next year compared to this year's full year guidance, which they reaffirmed. But if you look at the growth rates relative to that forward multiple, which is trading around at this point in time, around 19 times earnings, it's basically trading at one times or a little bit more than one times its EBITDA growth. So it's a growth company that's growing at a reasonable price. And all of their businesses seem to do very well, even though some of their businesses, like communications, don't necessarily fit in with money transfers, but they seem to be doing it very well, and they're executing very well, and their stock prices rewarded shareholders very well.
Yeah, George, there's something, and I don't mean to say this in a disparaging way, because it's not like it's not a forward-looking company, but old-fashioned about this, where they have these segments, and it's sort of like this holistic networking operation, but they're growing every single segment, and they're making net income on every single segment. It's like, where do we lose this prudence in the modern era where, companies just sacrifice everything for the big revenue growth? Like, this company's doing it in a sustainable way. Now, I'm not saying that their businesses can't be disrupted and things can change, but from a financial, good steward of capital situation, this is one of the better I've seen when it comes to a company that's going from maybe micro cap to small cap here.
Yeah, that's the thing. And like I said, a lot of times when you see these this is a small conglomerate, let's call it, they seem to have achieved scalability across all their platforms and all their businesses. So, operationally wise, they seem to be executing very well, irrespective of the fact that top line sales are not growing as fast. They are growing through acquisitions. Gross margins, total system wide, this is all their segments, 34%. 5-year average around 25%. If you look at net income margin, it's positive. They generated around 171 million last year on about 1.25 billion in sales, and that has been growing by about 500 basis points over the last 5 years. So this is just a classic GARP story, growth at a reasonable price, and they've been growing reasonably priced. And what do you see? You see trends that move higher on earnings, and they just continue to inch higher, then they gap again. So if you just look at the 1-year chart, you'll notice the gaps in the chart correspond to earnings events. And a lot of times, more often than not, these gaps scare people because they're like, well, I gapped higher, I missed it. No, these generally, from a trend trader and a growth story standpoint, are still entry points. And that may be the case here, I can't say, but kudos to them. They're doing very well, and the shareholders have held it, at least in the last 5 years, have been rewarded almost 10 times their initial capital outlay.
Really, really good overlooked stock today. I love the background and the company not doing anything super sexy, let's say, but doing things really, really well. And sometimes that's all you need to do. A good company to cover here to close out the week. George Tsilis, have a great weekend.